increase.
Nikhil Kamath is interested to pick up more additional stake in Nazara Tech.
The only space where the returns have not come as yet is the public charging.
The seasonally adjusted first quarter growth starting from the last decade, it is actually the highest in the last 10 years.
But there's been a pickup in the markets, particularly the midcap index.
Vedanta had a nexus with the government in terms of weakening the regulations which rule the environmental standards when it comes to exploration or mining.
UPI transactions have reached all previous records to cross 10 billion transaction volumes in August.
And what a recovery, Reema, we've seen in the Bank Nifty from the lows, right? And that's pushing Nifty higher.
Well, that's the day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Reema and Surabhi.
And it's after a long time, Prashant, that we can say it's a Friday, the markets are feeling good and there's green on the screen. I think last 2 or 3 Fridays we've had pretty downbeat days, but this one's different.
You know, shirt
It's
color.
your color, yes, thank you.
In the morning I was saying, well, you know, really, green.
Bringing some
green,
cheer.
it's too much green, but well, it's too much green on the screen as well, right? So it's absolutely a rocking market. There's no other way to put it. 1% basically on the Nifty, 1% on the Bank Nifty. The expiry, of course, was yesterday, and maybe that overhang is behind. In the morning, we were kind of, I remember talking about whether we should still give the benefit of doubt to the market, because on the Nifty, it had been a grinding, slow-moving kind of fall. Nothing large first of all, and then a slow-moving one. So, you know, the benefit of doubt, looking at the screen, there is no doubt which way the market is headed. Is absolutely bouncing back in a spectacular fashion. 1/3 of the Nifty gains, the 1% that you're seeing, which is about 90 points now, 90 points, 1/3 of that is coming from these 5 stocks: ICICI Bank, Maruti, Axis, NTPC, Bajaj Finance. So it's pretty well spread out, representation from financials as well. These are 2 levels I just want to put out. I mean, we're already above it, most likely, unless something goes wrong in the next 60 minutes. We'll close above it, but that's important. This is the 20-day moving average for the Nifty, which is 19,422, and the Bank Nifty, that number is 44,348. We are 45,500 plus, 44,500 plus. So, you know, will be good. Will be very good if you're able to close above it. Mid caps and small caps, you know, it's another story. They needed no help. The small cap index rallied 0.5% in the last 30 minutes while the Nifty was slumping. And today it's up another 0.8%. And the small cap index will come up. It's stronger. 1.25% is actually picked up in the last 10-15 minutes or so. For what it's worth, we'll get more data out of the US, the monthly jobs number. And unless that is a big shocker one way or the other, I think market will just move on. But that's later around US market open time. Reema.
Hi, and look at the way the banks have come back today, right? Yeah. Banks are getting counted. The Nifty banking index is up more than 500 points. Every single day, the Nifty banks, the individual banks were underperforming the benchmark. But today, there is clear outperformance. The Nifty bank had a quiet, flat start, but after that, it's just taken off, steadily building on the gains. And now we're at the high point of the day. With the rally right now, the Nifty bank is week to date positive. So on a week-to-date basis, the Nifty banking index is a gain of about 0.3%. The other notable movers include real estate. The realty index is up 5.5% for the week. Metals is up 4.5%. Autos have done well. And IT. IT continues to be that steady gainer through this entire month. And this week, it's added on 1.8%. On the index per se, with today's gain and nearly a 200-point up move, we've crossed the 20-day and the 50-day moving average. Now, one level that I would watch is 19,452. That was the intraday high on the Nifty this week. It was hit on Wednesday, and after that, the Nifty turned lower and went down to levels of 19,250, 230, thereabout. But that's going to be one hurdle that we would like to cross just in the immediate term, and we're very close to it.
The way this momentum is going, I mean, it's a very different market. It's just got a completely different nature and texture. By the way, on the Nifty 50 tally, there's not even one stock that is down a whole 1%. The 3 or 4 decliners that are there, they're down about 0.5%, you know, to 0.6%. That's the strength of this market. Let's fire up a lot of the Nifty gainers. We'll just keep firing those plates up for you. And what you'll see is that's the contribution chart, how the big boys are shaping up. So ICICI Bank, Axis, the banks are contributing. NTPC is having a superb rally. And that's the point that I was making. Now, if you replace this with just Nifty gainers, a lot of new stocks are really showing up on the upside today. NTPC is one of them, with all this talk of the peak power deficit coming back and the need to add thermal capacity also very, very quickly along with renewable. That whole narrative is working very well for NTPC. But even beyond that, I mean, ONGC up 4%. Now, not too often you hear these sort of, typical utility stocks do what they're doing. So ONGC, NTPC, of course, the metal names have been excited because of the steps that we've taken. We've heard from China. And Tata Steel is up, JSW Steel, even other names. I mean, then you've got a Hindalco, Coal India. So a lot of newer names on the screen, a lot of auto names that are participating. Maruti had blowout numbers. We'll talk about that when we move forward. That's a stock that's up and about, leading the move in the auto space, 3.5% over there. Eicher, even Bajaj Auto, where the numbers weren't that great. I mean, they're really struggling in the month gone by. But even then, I mean, markets in buying mood. And it's worked very well. On the mid-caps, I'll just, share some examples that give a hint of the momentum in the mid-cap market. It's a roaring rally. Look at RailTel, 16% on that stock on massive volumes as well. When we are talking what? We're talking well over, I think, 4 crore shares that are trading on RailTel today. So 43 lakh shares that are trading on RailTel. So it's above the average that we see. BHEL is up 12%. IRFC, ITD Cementation, India Cements, a long list. Short point, it's a very strong market as we're getting set for the last hour of the day and the week. So what should you be doing in this last hour? Well, let's take the conversation straight away to our technical expert and get some sort of trading ideas going. We have with us Mitesh on this leg of the show. Mitesh, good afternoon. It's really a good afternoon for the bulls, right? What are your trades now?
Yeah, good afternoon, Subi. I think you put it rightly. Very good afternoon for the bulls. I think the markets, have been testing this level of 19,200 again and again. Now, my worry for the last few days was that every high which was, happening after that pullback from those levels was lower. The last high we got was few days back, which is 19,452. And that's why that became the first pivot to watch out for. So my sense was that, in case you bounce back again, we should hit 19,450. We've done that. The good thing is that with this rise, I think the intraday charts have turned very strongly on the upside. The expansion is being visible on the hourly and the 2-hourly charts. But clearly 19,450 is a pivot which remains in force because we're just trading around that level. My sense is that I think, if not today, but on Monday, I think definitely we will cross this and head towards 19,550 as the first target and 19,680 as the second target. So I think we'll maintain long bias. In case we get declines to about 19,380 odd levels, I think I would use that as a buying opportunity. And this is on the spot, so roughly about 60 points low. And if I'm holding long, which a lot of our viewers would be, then 19,375 becomes your trading stop. So maintain a positive bias. I have 2 buy calls right now. Wipro is a buy with a stop at about levels of 410 and a target of around 430 can be looked at over here. And PNB from the banking space is given a good breakout. So PNB is a buy as well. Keep a stop at about levels of 63 half and look for a target of around 68.
Okay, thanks very much, Mitesh, for that. We'll come back to you for more. I mean, there is so much happening. It's kind of difficult to get your head around everything which is going on, and so many individual stock-specific stories and things which are panning out. One such name is Genus Power. And take a look at the move, right, in the stock. It's, I think, the last I checked, about 5% higher. I think that's a daily limit. Genus is the same company which tied up, exactly 2 months ago on the 5th of July with the GIC. That's the Government of Singapore Fund. And it was a interesting kind of arrangement which they struck. They get the capital from GIC to be able to bid for smart metering projects where there is a fair bit of visibility. 2 months back, the stock was 170. It's gone up to 270. So incredible. Vivek is here to just kind of to talk to us about the latest order which they received, I think, yesterday evening. That's a large one, but I mean, talk us through what is happening with the company. Vivek, take it away.
Well, absolutely. So, when you're talking about this particular name, and like you mentioned, the key trigger, of course, has been the partnership with GIC and its affiliates. Along with that, immediately post that particular deal being struck, there's also been on-ground order wins that the company has received, and the order wins have been quite substantial. So, first let's have a look at the news flow that's come in yesterday. The number one, they got orders worth over 2,200 crores yesterday. Now, this is for smart meter installation, and smart meters of over 24 lakh smart meters is what the company would be installing. And in the last 2 months, this is the third such order that the company has received. So now the total order book of the company stands at 11,000 crore. Just for some perspective, at the end of July 2023, the order book stood at just around 8,200 crores. And in fact, if you go back to as late as March, the order book was just around 1,700 crore. So what is the key development? As you alluded to, the key development, of course, has been the fact that the company, number one, has tied up with GIC and have created a platform where that particular platform would be bidding for most of the smart metering projects that the state discoms would be coming out with. So GIC has a 74% stake in that particular platform. The remainder is held by Genus Power. Apart from that, additionally, a GIC affiliate called Chiswick Investment will be investing close to 519 crore in Genus Power for a 15% stake, and this particular investment would be made via the stock warrant scheme. As talking about the guidance as to what exactly the company has given, FY24, the company is targeting to execute orders worth 1,200 crore. EBITDA margins of close to 15% is what the company is targeting. And the stock move, like you rightly said, has been quite stellar. 1 year stock move has actually been close to 219%. Such significant up move in just 1 year itself.
And should just point out, Vivek, thanks very much, and thanks for the reminder on the GIC tie-up as well, because that event became a re-rating trigger of sorts. If you pull up the 1 year on Genus, we'll see that the bulk of this lift-off really started happening around the second week of July. And July is when that agreement with GIC was formed. So you can see what happened. I mean, completely changed July onwards. The entire orbit and the trajectory of the company, at least the stock, if not the company. Well, let's discuss the stock also with Prakash Diwan, who's joining us this Friday afternoon. Prakash, thanks for being with us. Happy Friday to you. Genus Power, what a move. Genius move, should I say. What do you think of the stock?
Good afternoon, sir. Absolutely. I think it's a stellar piece of turnaround for a business that has been kind of in the making for a long time, and now when the government actually has started releasing a lot of these orders, and anybody who's been capable of participating has benefited. So, and also let me remind you, there are lots of players which are into that same space and vying for the same space, if not as big as Genus. The key is that execution is now going to take a while for all these 11,000 crore orders to be done with. So you'll have to give it time. Don't expect fireworks to continue. The good part of the re-rating is done with. The GIC JV definitely is a big enabler for the company to participate and as compared to the other players, bid for much bigger pieces of the orders that are available. So there's one company called HP Electric, which is also into a similar. I mean, that's one of the things that they do along with wires and cables. They of course have the big daddies like Tata Power and all, which will also start looking at that segment. So the entire space is getting re-rated of sorts, and my sense is there's lots to pick from, and then you go down into who are the vendors for these smart powers. There are a lot of companies that make magnets which go into smart metering, and the market will start sensing the opportunity in some of these strong names. There are a few in the listed space, I can tell you, but you'll have to do your due diligence to figure out how many of them actually benefit from some of these downstreaming of the orders that are being executed now. So lots that's going to be happening in that space, so for sure, yeah.
The only pocket which is a bit soft today is the FMCG basket. Names like Britannia, HUL, they're not falling, but they're not participating on the way up. So HUL Britannia is down in the red right now, down about 0.1%. Outside of that, Mrs. Bector Foods, that's currently showing you a cut of close to about 3% Maybe it's the monsoon worry, maybe it's fears about food inflation, which is keeping a lid on all these stocks right now. Prakash, afternoon, and thanks so much for joining in. BHEL, look at that stock go. It's been winning orders. The latest one was NTPC, but now it's up 12%. The stock has practically doubled. Where does it go from here on?
Good afternoon, Rima. So, this is one stock that has, to be honest, surprised a lot of us, including myself. I never anticipated the stock to have done so well. It's kind of not just on the back of orders, but a lot of the orders that it is getting are very high margin. I mean, the margin accretive, order flow that's coming its way is very different from what BHL has been used to, or we're used to seeing from BHL in the past. So if you look at the last 1 year trajectory for the stock, it's done about 60-70% on the back of a re-rating that's happening of the business underlying business itself. And today when you talk about the management, give some sort of an indication that the order book for the next few years, in fact, their annual report also talks about numbers which are almost like close to 68,000 crores going in the next few years. Now, if that were to translate, it's almost like 4x of what revenue they are doing right now. So, there's enough business for them. And this time around, it's come at a decent margin profile. So a lot of the good stuff has come in the price as well. I'm not too sure whether, you can keep on extrapolating this because execution becomes a big challenge for some of these companies. We've seen that in the likes of L&T and all, which had very impressive order books. But execution, the translation into execution is always a challenge. So we'll have to, I'm not saying BHL won't do it, but you'll have to give it time to be able to do that. The area that I spoke about the other day when we were speaking about BHL and the inflow on orders was what's driving BHL order is the capex on the government side, and that's going to be, there's one pocket where the government capex is going to be significantly larger than what we are used to in the last few years, and that's going to be mining. So look at miners. I pointed out Coal India at that point in time, NMDC, Hindustan Copper, and all of them are flying off. The reason is the government has started realizing that for power, you would need equipment, of course, which BHEL will be part of that value chain. But at the same time, you will also need some of these thermal units to be kind of, fed with the right kind of input side as well. And that's where some of these companies will start revving up very well. So I would definitely put my money into a cycle which is yet to kind of begin in a favorable way rather than the cap goods sector, which is already done so well.
I was just looking at estimates for just to go back to Gina's. They did a rupee and a half in EPS in FY23. Now, of course, you would look at FY25 estimates. In FY25 is expected to do about 6.5 rupees in earnings per share. So it's even on FY25 earnings. I think it's now almost 40 times. Yeah, I mean almost 40 times earnings for Genus Power, which is of course, I mean, much better than, even if you look at trailing numbers, it's just completely crazy. But yeah, I mean FY25, it's 40 is high, but well, in a market like this, I guess people can live with it. Just a quick, Prakash, if you will, on BHEL, if you want to come in, since we're talking about that space. Vivek highlighted some of the NTPC order, NTPC is investing 15,000 crore rupees, a thermal power project, large thermal power project. BHEL said that they've got an order value is not disclosed, but could be between 10-12,000 crores, so pretty large. And BHEL is still 80-85% power. And we are hearing this thermal power coming back after a while. Any thoughts on BHEL, if you looked at it seriously, and whether it's buyable here?
So that's exactly what I was pointing out, Prashant, that the likes of BHEL are definitely beneficiaries of this entire push that the government is doing to make sure that they're self-sufficient on the power side, especially thermal. And thermal is not going to go away in a hurry. So whatever happens to renewables in terms of strength coming in and all, thermal will remain the backbone of our economy. And if you look at BHEL order book, it's already like 4x, 4.5x maybe of whatever they have been able to execute on a year-on-year basis. So, which means that they have their hands full for the next 3.5, 4 years. And this time around, the margin profile of most of the orders is far more lucrative, whether it's orders from the thermal plants, whether it's some of the railway orders. So there's lots that's happened to change the texture of the company, and a lot of the flab is out. So from that angle, it's already got re-rated. I would now wait for it to kind of start executing and seeing a lot of these orders translate into revenue. And once you see that top line, bottom line come in place, and you at some point, if you get a dip, you would probably buy into it on dips, not at these elevated levels.
Since we're on the subject of power, I was just looking at a long 10-year chart, Prakash, on NTPC, and I was trying to get the 2007 high. I think, yeah, that's the last time we saw the stock above 200. 230 today. Still not, I don't think it's crossed the all-time high, but what a move. Now, the question is that it's hard because typically it's a utility stock, just completely gets range bound and then stays in that range for years. But do you think this time it could be different, or is there no point buying now because you'd be buying at the peak of a multi-decade rally?
So, Subi, I don't think this is going to be a peak of sorts. We've seen NTPC come down from its earlier high levels, given OFS and a lot of other technical triggers rather than just fundamental. But this time around, there's a re-rating that's happening in all of these utility stocks for two reasons. One is their efficiency in terms of return ratios has changed dramatically. If you compare that with, let's say, 5 years back, they're almost like 60-70% higher now. And the second is the capital structure is in their favor. So if the return ratios are better and they're able to utilize their capital to grow faster, the operating leverage kicks in. There's no reason why they can't get re-rated. There's visibility of earnings, which is helping them. But if you look at what is happening to NTPC, just extrapolate that to some of the smaller players within the public sector ownership basket. And there's one company called NLC. I mean, sometime back, the management was on a channel talking about what they're doing. There's so much that's happening in terms of, a combination of thermal and renewables out there as well. It's already, from the time I spoke first about the stock, I remember it was in its 90s, just about a couple of months back. It also has done well, no doubt. But I think these are companies which will get re-rated more than the giants like NTPC and all, because they're fairly well owned already. So you won't probably have much ownership coming in or changing dramatically. But at least in these smaller names, you'll probably see a lot of ownership come in. From the institutional side, I mean, and that will probably drive the stock in a slightly more favorable.
Guys, I was just looking while Prakash was speaking. I was trying to check. It indeed is above its 2007-8 high. The high then was 226, 4th of January, 2008. Of course, we all know. Prashant would definitely remember what happened soon after, a couple of days after that all-time high of the market. That's NTPC doing very well, lifetime highs on the stock today. Also, what is doing very well is the commodity space, particularly metals. Base metals have been trading firm. Manisha has been standing by. Manisha, sorry to keep you waiting. These are like historic times for some of these power stocks as well. But you tell us, metals are a huge headline today. So the market seems to be getting excited about all these Chinese measures.
Oh, well, yes. To begin with, China data that all came in the last couple of weeks has been on the weaker side. So the markets were anticipating that China would step in and do something. These are still not big bang measures, but it is the step in right direction. So to begin with, China has now unlocked financial channels on stocks, bonds and loans for the private companies. So this is basically pushing it from the lower side itself. Also, China says that they will be reducing the Forex RRR from 6% to 4%. This is effective 15th of September, which the markets also are factoring in right now. Also, the China Caixin PMI data that came in today has been the best in this year at 51, and that has supportive. Also, the support comes in from the dollar index, which is off 104. We've seen dollar index decline by 0.5% in this week. And there are chances that the US Fed will not hike interest rates for the month of September, also has been supportive. So you have the iron ore prices trading at a 3-week high. Steel is trading at a 1-month highs. It's a 3-week highs for aluminum and copper as well. So when you look at this week and the percentage gains, almost every metal is closing this week on the positive side.
Okay, China's been announcing so many piecemeal measures, right? The cut in interest rates, then the cut in stamp duty on stocks, and now this. And that's fired up metals around the world. But let's, Manisha, do stay on because MCX has seen its volumes hit record highs in the month of August, and the stock is up 9%. What's the news?
Well, yes, this one is really blazing high, isn't it? Because there are 2-3 factors here to watch out for. One is, of course, the volumes, which have run up quite strongly for the month of August, especially with the way the commodities have been volatile. So when you look at the overall volumes on the exchange, they have hit a record highs for this month. The FPI, the foreign participants, the cumulative turnover also hit an all-time highs on the exchange. Overall, options have done quite well. So while futures are doing good, options really seem to be catching up right now. And we've seen an all-time high onto this one as well. Within options as well, it has been crude and silver where we have seen yet another record high coming in. So these products really seem to be doing quite well. The second part really is the mock trading sessions when it comes to the tech transition for MCX. That has been in the news and we've seen the stock getting beaten because of those reports as well. But when you look at the month of of August, while one mock trading session is today. And MCX has done 5 of them in the month of August as well, with an expectation that they were perhaps glitch-free, and the deadline of December 2023 perhaps would be met. The third thing is when you look at the relative moves that MCX has done in sense of BSE. So today we clearly seem to be looking at MCX catching up, even outperforming BSE with nearly 8 to 9% of gains. If you look at the last 1 month, though, we've seen MCX gain by 12%, while BSE has been up by 33%, and that is a 6-month chart as well, where MCX seems to be underperforming BSE. But with this positive flow of news coming in, the stock definitely seems to be doing that catch-up.
Thank you for that. Prakash, do you like MCX?
Well, I think it's definitely a business under repair. The second factor that Manisha pointed out rightfully, these volumes wouldn't have been possible if it weren't glitch-free. So the TCS provided solution that has been a bit of a vexatious issue for the company could possibly be now behind us, or very soon behind us. And if that were to happen, they'll be able to ramp up very well. So yes, it definitely looks at, seems like being in the right spot in terms of being able to capture all this. And remember, we're looking at a commodity surge or an interest come back in commodities very much. So Dr. Copper is what, is explaining a lot of things, and you can correlate it to the Nifty very well at some point in time. So if all of these things were to start doing well, MCX will definitely be a key beneficiary.
Okay, all right. Prakash, thanks very much for that. Always a pleasure having you with us here, and have a good weekend. We'll see you back soon next week. 180 points on the Nifty, so holding on in a pretty good fashion. 19,435 is where we're at. Mithun Aspath of Kiva Advisors joins us on the other side. Stay tuned. Okay, welcome back. There's just lots of stuff going on, really. So let's just quickly highlight a few names, and then we'll welcome in Mithun Aspath, who's with us. So BHEL we discussed. Look, pull up MTAR Tech. This is a mover yesterday as well, and especially in the last 30-40 minutes of trade. MTAR Tech is up another 11% right now. All these railway stocks, right? I mean, big time movers are RailTel, 15% actually on RailTel. IRFC is up 9%. RVNL is up about 5% or so. That's it. I mean, so that's the railway pack. BSC, of course, we've been talking about on and off, 5% higher there. NMDC is coming up with 5.5% gains, if you can have that one up. That is NMDC. ITD cementation has been buzzing from the morning. Manisha talked about MCX, which is looking solid. Gas Authority is up about 5.25%. This is the largest volume-led gainers list. There's India Cements, which is up 9%. So 257 on India Cements. DCM Shriram was up actually in the morning, was up 20%. I think it's cooled off a little bit, but 13% still on DCM Shriram. Something like a JM Financial is up 9%, 10% actually. There is Cyient, which is up 5%. Latent View is another one, which is up about 6.33%. So GMM Fodler, right? I mean, that deal happened where I think Fodler sold, but the stock is up 6%. Paras Defense is up 6.5%. I can go on because there are so many of these names. Jyoti Laboratories continues its up move. Stock's up about 5.5%. And by the way, the list of volume-led gainers is still, I read, I think about 10, 12 names. There's another 12, 13 names with equally strong volumes, which I think we'll address as we go along. But Mithun is with us. Mithun is a managing partner at Kiva Advisors. Mithun, it's just incredible, right? The breadth of this move that we are seeing.
Yes, Prashant. Good afternoon. I think, obviously the last couple of months you've seen the market broaden and, there has been immense participation in the mid and small cap companies post the Q1 results, which were quite strong across the board. And with the RBI keeping rates at bay, I think, there has been significant participation through mutual funds as well as, individuals investing in the mid and small cap side.
Are you participating? Or I remember last we spoke, you were, and this is a problem, right? A lot of people, for example, we had Nilesh from Kotak in the morning saying that micro caps, small caps, not mid caps, micro caps, mini caps, valuations are very rich. I think in June when we spoke, you were also saying that across sectors, valuations are kind of rich, but they've only gotten richer. So you're sitting on your hands, Mithun, or jumping in?
Prashant, I think selectively, one needs to look at the fundamentals. And, there are still opportunities there where the risk reward is reasonably favorable. There are companies, I think, largely on the capital goods, anything to do with the capital investment on the railways as well as road sector, where, the order books are getting quite chunky. And there have been order wins across the board in a lot of these capital goods, EPC companies, which are trickling in every month. And we think over the next couple of quarters, this pace may remain quite strong. And hence, I think, these were spaces which were kind of ignored for the last few years. And since now reality is also catching up, the stocks are reacting because you have phases of capex. But I think we are definitely in a full-fledged sort of a capex cycle. And that is definitely what you're seeing on the screen.
By the way, another stock that's at a fresh lifetime high is Maruti Suzuki. It's gained 3.3% in trade, and now it's well above that 10,000 mark, 10,336 on Maruti Suzuki. The auto sales numbers are looking good for the month of August. 14.5% increase year on year, and on a month-on-month basis, their sales have gone up by 4.4%. So the stock is reacting positively to that. Eicher Motors is also significantly higher in trade. Here we only have the VECV numbers, which look good, 29-30% on a year-on-year basis, but the street will watch for the Royal Enfield numbers. July was a pretty good number as premiumization continued. Ashwat, anything in the auto ancillary pack which has caught your attention?
I think, Rima, we continue to hold our guns on the two companies that we've been talking about, Tata Motors and Eicher Motors. those are the two companies that we've been positive and continue to be quite constructive on. Tata Motors, especially with the JLR business, turning quite profitable, as well as their EV play in India, which has a dominant position. While it comes to Eicher Motors, I think obviously there are some competition headwinds on the higher-end motorcycles. But I think there are a slew of launches even from the Eicher Motors stable in the next few months. And I think the market size itself on the higher CC motorcycles is going to grow, and Eicher will lead the way.
Okay, so keeping the faith in Eicher Motors, had a product launch today as well, right? I think another Royal Enfield bike that they have unveiled. Good chatting with you, good listening to you. So just want to talk about one more sector, Mithun, and that is this whole new age company space. We've seen the huge move on a Paytm, for instance. PB Fintech has been, showing some slightly improving metrics as well. Are you willing to dive in, look at any of these companies, or maybe a Nykaa for that matter?
I think, Surabhi, the space, obviously, after the IPOs, a lot of the stocks did correct. And right now, they're in a phase where, the PE investors are exiting and the funds are entering. And a lot of that overhang in terms of stock is getting absorbed. And that's the process what we are going through right now. In the same time, I think a lot of these companies which were reporting losses at EBITDA and profit at the PAT levels are, looking to turn around. But one needs to kind of try and assess the valuation and see when they will actually become profitable. And even if they report a certain quantum of profits, does it make sense to buy? Or you look at companies across the market. I think you'll need to evaluate company by company. I think PB Fintech is the only one we have in our portfolios where, there is a path to profitability, and the company is also guided for 1,000 crore profit by FY27. Hence, we're looking more at companies where, the profit visibility is a lot higher.
Mithun, sorry, so just to kind of revamp back to what you said earlier, so this capital goods and the revival there, what do you own in that space? I mean, because it's real. I mean, we had Tata Power with us, for example, and we'll put out a story a little later about power and power demand going through the roof. So this NTPC order is a large one, 15,000, not order, but their investment to set up this power plant, 15,000 crores, right? When is the last time we heard something like that? Not in the last 10, 12 years. I mean, if this is going to play out, then, you can say that stocks have gone up. Say, for example, BHEL is up 100% in the last 1 year. But if this is turning and it's a start of these kind of orders, maybe a few more, there's no telling what these stocks can do from here. So you'll have to look at, it's a bit of a leap of faith, but it's playing out. We can see signs of it at least right now. So do you have exposure, and what do you own?
So Prashant, there are 2-3 ways of playing this. And I think this is across the board manufacturing renaissance that we are seeing. It's happening even in the US. Though interest rates are high there, you're seeing manufacturing, construction, close to 80% growth year on year. Primarily because if in India you have PLI, in the US you have the infrastructure bill, you have the Inflation Reduction Act and the CHIPS Act, which they have embarked upon. So I think in India, what we are trying to play through this in our portfolios, we've bought into, we have exposures to the steel sector, also the building materials in terms of cement. I think all these will also grow if the capex is here to stay. And recently, we've also added one of the public sector companies on the defense and railway side. So this is the way we've taken exposure so far, Prashant.
BEML? Maybe? I'm sorry.
Yeah, even I was trying to guess which public PSU is both in defense and railways. So, Prashant, your guess is BEML.
BEML does it, BHEL does it, I don't know. Which one does
BEL,
there are others
which
also.
one?
It's the Bangalore-based company, Prashant.
BEML.
Okay.
Yeah. Okay. All right.
Mithun, I remember last time you were telling us that textiles, you're quite bullish on textiles, and you see the cycle turning, the inventory levels are quite low, ordering will pick up. We're entering into the festive season. Operating leverage is also going to play out. Cotton prices have largely, come off from the levels that they were. Now, one stock in that, Gokaldas Exports, has gotten re-rated after, the acquisition that they did earlier this week. It's up 40-50% since the acquisition was announced. Is that one stock that you own in your portfolio?
We've had exposure earlier to Gokaldas, but at the current juncture, one company that we like within the textile space is Arvind Limited. This is a company where you have exposure to both denim, garments, woven textiles, as well as technical textiles. They have an advanced materials division, which is growing very well. And we think this is highly undervalued, considering the advanced materials business, which has been growing consistently at over 20%. And we actually think that business could grow at about 25% over the next few years, as the company has announced about a 600 crore capex on both the garments as well as the advanced materials division. And the advanced materials division alone in the next 2-3 years could be as valuable as the entire company if they would choose to, demerge and list it separately. And, the Arvind Group earlier has also unlocked value by demerging Arvind Fashions and their engineering business. So I think that is something that looks very interesting to us because the size of their garments business, their technical textile business is growing. And that's something that we are quite positive on.
All right, Mithun, interesting thoughts there. Good chatting with you as always. Thanks very much for stopping by and talking to us today. Have a great weekend, and we look forward to the next Connect. Well, back to the market, 180 up, no problems whatsoever. Bulls in absolute control as we get into the last 20 minutes of trade for the week. Quick break right now. We'll come back, get you a check on the dealing rooms. Nimesh is going to join in with all the chatter and all the talk, and then some final trading ideas as well coming up with Nitesh.
Welcome back. The dealing rooms must be an excited lot. One, it's a Friday, and two, markets are doing exceedingly well with a 1% rally across indices. Nimesh is here with our D Street chatter where he'll get us insight into what dealing rooms are saying. Nimesh. Nimesh? Okay, we can't quite connect with Nimish right now, but just to quickly take stock, 19,450 appears to be a bit of a resistance level for our markets. For the last 1 hour, we've been hovering at this level. There you have it. The line, which was sloping up, has flattened out, and it looks like 19,450 is a bit of a hurdle for the markets to cross. But no taking away from the fact that this has been an outstanding session for our markets. We've been consolidating. There was a downward drift in the market. But today, it's come back in full. The bulls have come back in full force. Nimesh, we were just saying the dealing rooms must be an excited lot today.
Oh, absolutely, Rima. What a strong comeback or what a strong start to the September series, right? The Nifty is up 1%, the Nifty Bank is up 1%, the PSE index is up 2.5%, and there is broad market participation as well. Interestingly, on a technical basis, for the first time in 7 weeks, we are going to close week on week on a positive thing. Even that is technically a very strong statement to make. So clearly, there is full control of the bulls now. On the start of the fresh series. As I said, there is a lot of participation in the broader markets as well. The mid-cap, small-cap, all are participating as well in today's trade. After just 2 days of pause, the PSU stocks are back in focus and back in full force. Across PSUs, whether it's rail PSU, defense PSU, power PSU for that matter, all are buzzing in trade and are well chased as well. That's overall feedback. The other thing is the metal stocks. After a few months of pause and a bit of underperformance, the metal stocks are bouncing back very sharply today. Of course, on back of the Chinese data, but clearly there is under ownership and looks like there is a bit of buying back in the metal names as well. So a good start to the September series. The series is light, so to speak, and technically a positive week-on-week close would mean that there is a good ammunition for the bulls to further carry on from current levels.
Okay. Rima, you were asking whether dealing rooms are excited. I can tell you that Nimesh is more excited than the dealing rooms right now. I've been sitting next to him all day. The excitement is palpable. It's a market to be excited about, right, Nimesh? Just a lot of stuff happening.
I was talking to one of the leading brokers, domestic, and they were saying August has been one of the best months ever. Right, volumes have shot up, and plus there've been so many block deals, and all these brokers have been, doing the brokerage for these block deals, matching the buyer and the seller. So August has been one of the best months ever for the industry.
Despite the index being flat and range bound, people were busy.
The deals, IPO, secondary market,
money as well.
Exactly.
Yeah. And they're all talking to Nimesh. So Nimesh, tell us, what are you picking up? Specific stocks?
Prashant, in terms of individual names, I'll talk about the individual stocks, but broadly, what Rimo spoke about, large volumes, that's clearly positive for the exchanges as well. And we are seeing what's happening to BSE, right? The BSE had to increase the buyback price from 860 to 1,080, and now today the stock is at a fresh high of almost 1140. So clearly the exchanges have done really well in the August series. So that's playing out in the exchanges as well. Okay, in terms of individual stocks, the first stock in my list today is IDFC First Bank. The stock has sharply recovered from the intraday lows. There was a large block, 4.5% equity has changed hands, and I believe one of the long-only big name, a single buyer was a buyer in today's block deal. So the disclosures could be quite interesting as far as IDFC First Bank is concerned. The second stock is Latent View. This is one stock which is again buzzing in trade, huge volumes as well. I believe some large HNIs are quite active. An influential HNI investor has been an active buyer in Latent View of late. And there is a strong indication of a large corporate development as well. Remember, the company is sitting on cash, so there is an expectation that there could be a large, M&A transaction as well. So that's keeping the stock exciting. That is Latent View. The third stock is EIH. We've seen a big move in a lot of hotel stocks. EIH stands out in terms of strong volumes at the FI desk. For the last 3-4 days, there is delivery-based buying, and so is the case today as well. So for the third day running, the delivery volumes are going to be quite high in EIH. So that's the third one. And the last stock is ACC. Again, stock been consolidating, not moving much today. In fact, the stock got deleted from the MSCI yesterday. And actually, yesterday there were some buyers as well. I believe some domestic mutual funds are taking a contra bet in ACC, and some bit of accumulation is happening in that stock at lower levels.
Okay, got that, Nimesh. Very, very interesting list, especially EIH. Now that you mentioned it, yep, 9%. Yesterday it was Indian Hotels and Lemon Tree. Today it's EIH that is seeing plenty of price action. Thank you for that. Now let's go across to Mitesh as promised, get some final trades going. Mitesh, it's a good Friday, I guess, for the bulls. You tell us, final trades, any thoughts on the index?
So it's a very good day, I think, despite the fact that we are not closing above 19,450, I'm inclined to take long positions from. I'm believing that, possibly on Monday we should get past this pivot and head towards 19,550 and in a good case 19,680 as well. So maintain long bias. Tech Mahindra is a BTST call over here. That's in fact IT names are looking very strong. So Tech Mahindra is a BTST with the stop at 1217 for targets of 1250. And the Amco segment is having some kind of a big breakout. So that's a BTST as well. Keep the stop at about levels of 879, target of around 905 billion.
Okay, all right, Mitesh, got that. Thank you very much for the calls. You have a great rest of the day and a good weekend as well. By the way, those are good numbers from TVS Motors as well. Ashok Leyland came a while back, again beating estimates. TVS Motors better than estimates. Maruti blowout. M&M strong. So you can say that barring Bajaj Auto, where there was a year-on-year decline coming through, month-on-month decline, most of the auto numbers have actually shown good growth. Even Bajaj, I mean, it was lower, but not as bad as feared. So you can, look at it that way as well. Overall, a good day for auto stocks.
The other trend that stands out is in the two-wheelers, the decline in exports has started coming off a bit. So both TVS Motors and Bajaj Autos exports have declined. But the percentage decline was far more in the prior month for both Bajaj and TVS Motors. So maybe the pressure is easing off the export weakness pedal too.
Yeah, absolutely. That's a trend. I mean, and the Bajaj management said that they will not go back to doing 2 lakh units in their export markets immediately, but at least there's a climb back. They're getting there is the word. Let's now move on to a CNBC-TV18 exclusive. Zerodha founder Nikhil Kamath is likely to increase his stake in Nazara Technologies. Sonia has more details on the story. Sonia, what can you tell us?
Well, thanks a lot for that. There's definitely a lot of interest picking up in the Indian gaming industry. We understand from sources that billionaire investor and co-founder of Zerodha, Nikhil Kamath, in his personal capacity is looking to raise his stake in Nazara Technologies. He currently owns 1% stake in the company and is looking to take that up to 3.5% stake. The talks are on currently and the deal may get finalized within the next few days itself. Remember, Nazara Tech is having a board meeting on the 4th of September. We reached out to the management. They said they would not like to comment on any kind of speculation. But if you look at the stock has seen a huge run up in the last 6 months alone. The stock is up about 50%. And the bet that Nikhil Kamath is making is on the gaming industry in general, where he's looking to pick up stake not just in Nazara Tech, but in a couple of other gaming businesses, both in India as well as abroad. Now, the gaming industry, the gaming market is expected to grow from $2.8 billion in 2022 all the way to $5 billion in 2025, which is a compounded growth rate of 28 to 30%. Even if you look at the Nazara Tech business, particularly in Q1 of this year, the revenues in the gaming business went up 24% year on year, while their revenues in the esports business went up about 15.5%, and that trend is expected to continue.
Thank you very much for that. Sudeep Bandyopadhyay, Group Chairman of Indie Trade Capital, is with us on the show. Sudeep, Nazara is a company which has been growing very rapidly. I remember last year, I think it was a 75% kind of a top-line growth. They've been rapidly raising money, making these tie-ups with, various different, companies, Nordwind, etc., buying IPs and scaling up with the help of, partnerships. Now, Zerodha is also, betting money in it, Nikhil Kamath. Do you like Nazara Technology?
Absolutely. I think globally, the gaming industry is huge and it's growing very, very rapidly. I think the numbers Sonia was just mentioning, I wouldn't be surprised if the eventual numbers beat that. So instead of being a 5 billion industry, it may end up being about 7.5 billion industry in a very, very short time span. So globally, I think if you look at how the gaming industry has evolved, how the software attached to the gaming has evolved, and how the hardware attached to the gaming has evolved, it's an amazing story, an amazing growth story, and it's still growing. It's not that it's coming to a plateau at some stage after continuous growth over a period of years. So I think India, we are at a nascent stage. We are just at the cusp of that breakout from just somewhere the industry being there from a really, really big play, and I think we are at that stage. So entering Nazara or some other gaming opportunity at this stage is extremely, I think, the right thing to do. The valuation wise, I think the prices have moved up already. But if somebody is a long-term investor, even at current prices, Nazara definitely looks good.
Okay, that's a take on Nazara. Let's look at some more movers and shakers in the broader market. Just checking some more stocks that are catching the eye. Prashant was talking about some of the railway stocks. They're still very, very active. Look at RailTel, for instance, 14.5% on the upside. There are a few other names which are making it to the buyer's list as well. Of course, we've mentioned ITD cementation, and that's an order win story. That's why that stock's been excited right from the morning. But even otherwise, NMDC, RVNL, Hindustan Copper, it's a very strong PSU day. That's what we have. Sudeep, just very quickly, even railway stocks, the PSU railway stocks, would you look at buying anything afresh? They have a lot of momentum going for them. But does anything meet your checklist in terms of fundamentals? Railway PSU stocks.
They do. In fact, I think I did mention one of the earlier interaction as well. While the RITES and Railtail and IRCTC, all these have been moving up at scorching pace, and the valuations have probably reached a level where it becomes a little difficult for us to recommend. I think the wagon and the coach manufacturing companies, I think the way the railway modernization is happening, the way the orders are coming, are extremely bullish on Titagarh wagon, of course, and Texmaco Rail as well. I think Titagarh has run up quite a bit, and they have been doing all the right things. Texmaco was not getting their act right, but now the way things are moving, we believe that Texmaco can really be a surprise package, and it has moved up also, but it hasn't moved up the way many of the other railway-related stocks have moved up. So for a long-term investor, I think Texmaco Rail still is a good buy.
Okay, Sudeep, thanks very much. Actually, stay with us. Apologies. We'll just take a quick commercial break here. We'll be coming back on the other side and wrapping up things. There's 8 minutes to go for close. We are still holding with not 200 points, but 178, 180 odd points or so, 19,432. Stay with us. We're right back. Okay, 180 points on the Nifty is what we have, 19,435. Things are looking pretty solid, as I was mentioning here earlier. You know, Sudeep, so I want to just ask you about three names, right? Idea. Actually, I should talk about Idea and Indus Tower in conjunction. Because if Idea gets some resolution of some kind, I think Idea, of course, will benefit. But the other one is Indus Tower, which is, I think, also... it's also done well along with Idea recently. Some of these Jayaprakash Associates, another old name which people have been waiting to turn but never turns, but starting to participate a little bit at the margin. Something like Indiabulls Housing Finance, right? Again, a completely beaten down name, but it's got a large book, a housing finance book. Some prominent investors have gotten in, and this stuff happening to change the business around. Any thoughts on the price action we are seeing in these three names here?
Well, Prashant, I think out of the three, Indiabulls Housing Finance probably is a safer bet to play. As you rightly said, a lot of marquee investors are getting into it. They have a large housing finance book. And, the past challenges, image issues, governance issues, I think is a matter of the past. So we probably will soon see a completely different company there. And there is enough justification for a little aggressive investor to get into that. As far as Idea and Jayaprakash Associates are concerned, I think it's still in the speculative zone. Of course, a lot of things can happen, but fundamentally, there are a lot of things wrong. Idea has been losing customers every month, and the way things are moving, unless they are able to raise significant amount of capital, and that too pretty soon, it will be extremely difficult for them to resurrect the company. It's a great franchise. It's got a lot of assets which are worth looking at, but things today are not really, really good. As far as Jayaprakash Associates, I think they're in the pretty same position. So I don't think I will advise investors. If somebody is aggressive and they want to take a little speculative bet, they can get into it, but otherwise not really recommended.
Okay, all right. Sudeep, we'll leave it on that note. Thank you very much for joining in. Good talking to you. Have a great weekend. We are down to the last 60 seconds of the day and the week, and the bulls will finally go home in style with the market closing above 19,400. Yes, we didn't get a close above 19,450, but at least we've conquered 19,425 from what it appears. Let's see the adjustments. But now talking about the Nifty winners, good day and very well spread out across sectors. NTPC was leading from the front, 5% up. ONGC followed suit, another PSU name, about 4% higher on this one. Commodities as a pack did really well, whether you're looking at metals like JSW Steel or Hindalco, 2 to 3% up on these stocks, or even on the oil and gas side and other materials. ONGC I mentioned, look at Coal India, for instance, up about 3% as well. So the entire commodity complex and power, two solid pockets of the market. Banks also came back, IndusInd Bank, a couple of others, Axis Bank, most of them really helped the Bank Nifty close with a gain of 1%.
The bell has gone and the Nifty's ended at 19,422, so above 19,400, but couldn't quite conquer 19,450. NTPC is the top Nifty gainer, a 5% rally, a fresh 52-week high. ONGC rallies as crude prices continue to inch up. Strength in JSW Steel, Tata Steel, auto sales numbers largely look good. You had green on the screen, big green actually, for Maruti Suzuki, Eicher Motors. On the losing side, very few stocks, just about 6-7 stocks on the Nifty, which closed in the red. Cipla is the top loser, and then you had some softness in other pharma names like Dr. Reddy's, and then Nestle and HUL too couldn't quite participate in the upside.
We're talking about mid caps and small caps all week, and just to take a look at where we finally ended in that space for the week. Small cap index is up 4.5% this week. The Bank Nifty is up a third. The Nifty is up about 0.7%. Small caps are up 4.3%. So this is just an incredible run coming through there once again. Well, it's a wrap on this edition of Closing Bell, but don't go anywhere. Our Friday special, Smart Money will come up next in just a bit from now. We'll, of course, also have Editors Roundtable, which will be coming up. Stay tuned.